what considerations are you making? I mean, best case scenario for equity investors right now. What is it, John?
I think if you look at what equity market investors are looking for, I think they are looking for more policy supports, more impactful policy supports, and more sustained policy supports in terms of the shorter term. But as a longer-term minded investor, there's another way to look at this, right? Which is, in the shorter term, China certainly has a growth problem. The growth problem emanates or originates from the slowdown in the property sector, and there appears to be a reluctance on the part of policymakers to put too much liquidity, too much leverage back to the property sector, and then you sort of rinse and repeat and have the same problem again structurally in terms of economic growth. And so today, perhaps the policymakers are doing just enough to avoid problems in the financial sector, to avoid the property problems from escalating. So if that's true, then what the market investors are maybe looking for is a sign that the economy naturally sort of bottoms in terms of the cyclical growth. It's going to take some time, right? It's certainly not a 2023 story, but 2024, 2025 is certainly possible. And at that point, the economic structure would have changed. So what we've been clamoring for the last 10 years in terms of looking at better growth, better consumption and services sector growth, and less reliance on fixed asset investments on property, that would have been achieved by that point.
Okay, so at this point in time, you mentioned that maybe the pickup is a 2024 story. So in terms of strategies, because you oversee a few funds, is it still low vol against something that's perhaps that has a little bit more risk in that portfolio? What's a strategy that you think works at this point in time?
Yeah, we are a value shop, certainly our part of the team at AB. And where we've been finding a lot of opportunities are value stocks and value stocks in the A-share space. We like A-shares because A-shares are more domestically oriented. They are more dominated by domestic capital flow and therefore less susceptible to sort of the capital in and out based on the geopolitical tension and what global investors feel in terms of risk appetite for China equities. And then in this sort of giant A-share markets, you can find a lot of interesting stocks that are have their own idiosyncratic dynamic and therefore less dependent on whether the stimulus comes this week or stimulus fades the week after. So for example, some of these industrial cyclical stocks, bus makers, diesel engine makers, that has a foot in exports, and by exports I mean to places like ASEAN, Central Asia, perhaps Middle East, and a foot in domestic market. Right now, the export portion is actually working quite well and is helping earnings for those stocks. And then you do have a foot in the domestic market, so when that recovery comes, you do get to participate in that recovery.
How are you looking at tech? I'm just wondering, just given that we've seen global active long-only managers, according to Morgan Stanley, saying they continue to see net selling when it comes to some of these China tech stocks. Are you seeing that maybe there are actually opportunities in that space, or still, the regulatory hurdles, all that is still something that is going to be a drag on this market?
Sure. On the tech side, by tech, I think you're meaning sort of the e-commerce internet side of the market.
Sure.
Ultimately, e-commerce companies are consumer companies, right? Because they are ultimately merchandising companies selling products to the consumer. So they are going to be somewhat dependent on the health of the Chinese consumer. Chinese consumer confidence matters a lot to both the outlook and of course, to earnings. And then the Hong Kong listed portion of that market, of course, then is also susceptible to global capital flow. So what we just talked about in terms of how global investors feel about their willingness to take China risks. So from our point of view, there are certainly some stocks that are really quite cheap, trading at single-digit PE or low double-digit PE. And then when the investor sentiment does turn, to us, they present some opportunities to get in today. But since you mentioned tech, I think there's another portion of tech that's really quite interesting, and those are sort of hardware makers. Many of them are listed in the A-share space. For example, the 5th largest phone makers in the world is listed in the Asia space, and they largely sell handsets to places like Africa. And those are really interesting tech companies that are sort of overlooked by the investor community and therefore are quite interesting value opportunities for us.